Hello guys, Stan here. In this quick review of the market, I will give you insight of what's going on, what's happening, what to look at, what to actually focus on this week. Without further ado, let's go straight to charts and straight to the market. So the first thing that I want to show you is economic calendar, which is accessible by the link tradingeconomics.com/calendar. The main event, of course, the most influential event is publication of interest rate for the United States, which is going to take place on Wednesday, 30 minutes after the press conference from Jerome Powell, which will take place, well, 30 minutes after, right? So the most important event is the press conference itself. It's not the decision because it's pretty much stacked already. The probabilities are stacked for interest rate not changing. But what I think is the most important is that last week we had the tectonic shift, the dramatic shift of probabilities. Just take a look at the FedWatch tool. So you may find a video on this channel about how to use the FedWatch tool. I use it all the time and I recommend you to do so. It's completely free. It's published on the cmegroup.com website, so you can Google that. That's easy. All right, so a week ago, the probability of a hawkish scenario of the Fed was discounted at a level of 35%. Now it's discounted at the level of 26%. All right. All right. Now let's take a look. What I want to pay your attention, guys, to. What I want to draw your attention, if we go to FedWatch tool, you may find the link for FedWatch tool, how to use that in this channel. What I want to draw your attention to, guys, is that if we go to FedWatch tool, CME Group, so we can spot the tectonic shift of probabilities about the upcoming scenarios of interest rates. For example, let's take June, okay? We see that the probability of interest rate kept at the same level, not changing, was discounted at the 34% level. Now it's 72%, meaning that traders, investors are not betting on the interest rate drop in June. Maybe it will be July, maybe not. Nobody knows, but the situation becomes hawkish. Well, what does that mean? So practically that means the American dollar to be supported. But we don't see that action yet, so there's no support. Just take a look at what was going on with the US dollar last week. No support whatsoever, just Friday's action. So now is Tuesday when I'm recording this video. Friday's action was like that. So nothing at all was happening with the American dollar, and above that it was actually declining. So just take a look, right? It was actually declining. So that is the publication, right, of NFP, strong NFP report. So it was going up. That means that the sentiment for this instrument is bearish. Strong data release doesn't lead to the strengthening of the asset itself. So the US dollar is not going up after the strong data release. That's the negative sentiment. And of course, it's unsurprisingly Euro USD gold, they're moving up today until Wednesday. Maybe they will continue to move up. Maybe nothing will be changed here. Maybe they will continue to move up. But I don't believe so, because just if you take a look at the daily chart, I think that the rising cycle for Euro USD might be over. Despite its position at close to the 20-day moving average, I think that this position with a sideways market for more than, I guess, 2 weeks points to the insufficient demand on the current price level. So probably we need to have it testing the lower levels in order to continue going higher. So you see that the Bollinger Bands is actually climbing close to the price. So whenever the price touches or meets the lower band of the Bollinger Band, so we might see the reversal pattern. We might spot that. Not necessarily, we don't have a crystal ball, right? We don't know what exactly will happen, but that might happen actually. The same is with gold. Moreover, gold, I think, had reached the end of this cycle. So first of all, that's the end of the volatility cycle, because volatility had reached the peak. Every time when it reaches the peak, almost every time, market locks in a consolidation, meaning that there is not enough usually driver behind the price action to reach the peak or to drive to the new peak. Maybe it will reach the peak, but I don't believe that it will outpace the peak substantially, so probably it will get back to the range. And the main question is when exactly the price will go down. Will it go down on the Fed's decision, or will it go down 2 days after the Fed's decision? So that's the main question. But I refer to this movement as a trap, as a potential trap, which is called a bullish trap. Bullish trap means that you don't jump in the trade right away, so you just wait patiently until it gives the clear setup. Well, and if it breaks, and if it forms some reversal pattern or anything like that, you can even go short in this kind of situation. I think that the more interesting situation is crude oil, which had dropped below the 20-day Bollinger, and it had touched the 56 level, and that was pretty aggressive since Monday. Now it's retracing for the second day, and the fair price for crude oil is expected to stay at the 60 level. So that's not a huge opportunity, but I think that the mean reversion activity might lead crude oil touching 60, something like that. If you find some trade with a decent stop loss, so absolutely you might take a good trade here. It's pretty difficult to catch the trade with a tiny stop loss here, with a small stop loss, but still it's possible. All right, so what else is on this week? Of course, the publication of The publication of Bank of England interest rate decision. All right, so the next day, the day after, Thursday, Bank of England interest rate decision. It's expected to go down one step to 4.25%, so it's already priced in. Despite the strength of British pound, so it also looks consolidating. So yeah, the strength is here, so at least today it is growing, but I'm expecting it to peak just like Euro USD or anything else. I am expected to peak in the near future. So if you want to capture a long position here, maybe it would be wiser to wait until it slips below the previous intermediate term low, below the consolidation. So until then, it might be extremely difficult to spot the momentum. So, but it's not actually good practice to spot the momentum. So the much better practice is to buy the dip, to find the dip, which is not so easy too. But that might, in many situations, work better. All right, so let's sum it up a little bit. What's on this week? So first of all, the sentiment for the US dollar is slightly bearish, which we've seen in the form of no reaction on a strong NFP release. At the same time, fundamental situation had improved for the American dollar. Probabilities of interest rate kept at the same level. They have increased for June and even for July. So that gives Euro USD very small space for growth. Gold is probably at the end of the seasonal cycle and the volatility cycle, meaning that if it continues to go up, so I will treat it as a bullish trap. Crude oil, on the contrary, might be on the verge of the recovery, so at least to 60, maybe higher. So if I spot the entry point here, so I will be more than happy to take it. So yeah, what else on the charts? Well, Bitcoin maybe, right? Bitcoin is consolidating just slightly below the 93,200 or 300 level, which is the threshold between short-term holders and long-term holders. So I'm referring to the report from the Glassnode here. So it's just had crossed the two major resistances. The first is the 111 SMA, which is the technical resistance, the first one, and the second one is the STH line, which means that above this line, short-term holders are in profit, below this line, they are in the loss. So usually they start, closing some positions. That's a psychological level in a way. And we see that currently Bitcoin is not able to keep above this level, so it's just standing slightly below. And that's a good question whether it will be able to hold above or not. So currently it's not holding, so that gives it a little bit more bearish sentiment. Let's take a look. I think that sliding down is currently more dominant scenario, which we will probably pay attention to this week. Alright guys, thank you for listening. That was Stan. Subscribe to the channel, give me a like, and until the next video.